Good morning, everyone. It is Monday morning. Sorry for all the confusion. I was able to reorganize my schedule for this week. So there's going to be just real quick announcement before we get into today's video. There's going to be just 3 live streams this week, Monday, today, Tuesday, and Wednesday. Thursday's obviously a holiday here in the U.S. And then Friday, I moved my obligation from Monday to Friday, so I won't be able to be here on Friday. So at least that gives me a little bit more legitimacy from, I didn't want to disrupt today's stream. So hopefully you folks saw this, that I was coming live here on Monday morning as usual. So welcome to the Kendall Report. And make sure you hit the like button and subscribe before we get into this video. So if you're watching, hit the like button. All right, folks. So we've got an interesting short week ahead of us. We have the Fed minutes coming out on Wednesday at the end of the week, sort of the end of the week. There'll be a Friday market after that. And I'll do my best on Wednesday to set us up for Friday. But, you know, I have to tell you, I was looking at all the notes and just what was going on last week. But it's a coordinated effort on the planet to fight inflation through raising interest rates. We know that's the plan. Last week, Waller, Bernard, George, Collins, Daly, they all were, it was almost they had the same, keywords. You've seen those newscasts where everybody uses the same keyword. They're doing it too. The ECB, I thought Lagarde, I meant to mention this on Friday's video and it snuck by me, but I had to say it. But she had this thing, now they're doing little cliches that the ECB's policy needs to be temporary, targeted, and tailored. So now they're tailoring. I mean, just these words that these people use to convince us that they're doing something that's good for us. It's just ridiculous. So they're telling us basically we're going to have to destroy the labor markets to be able to get anywhere going. So I'll get into more of this here in a few minutes. We get about 8 minutes to the open, but I just needed to get that out really quick because this seems to be just such a coordinated effort to destroy the economy. And, I don't know how far this thing is going to go, but it looks like they're going to take it as far as they can. I'll get into more details, like I said here, when we get done with the whole show. So let's go in and take a look at some of the things that are going on here on the open. Just real quick, we're looking at the 10-year is back at 378. Amazing, we printed 368. The futures right now only down 10. We were down about 20 about an hour ago. So things are improving a little bit of a bid coming in to the markets. NAS down 40 handles right now at 11,668, and the RTY is down 0.28 at 1847. So we continue to struggle right around these numbers here. Let me get to a different screen and let's take a look at the market grid here, just to get some things going on as far as understanding what the grid is for today. I'll put that up on screen for you so you can see it right now. Go to the E-minis. The range for today that looks like we're printed the low of 39.48. So far, S1 was 39.49.43. So we've already printed S2, R1 88. We basically overnight already have already printed S2, R1, and the next level above R1 is at 4,004. And we continue to struggle right around the 4,000. We go through the algos after the open. I'll show you what's setting up. It's interesting what's coming in with everything that's happening right now. We've been running this cycle for multiple weeks, and it just can't get an acceleration over 4,000. I always have a thing when a market should rally and doesn't, you need to be aware. So I'll talk more about that in the technical section here just shortly. Let's go to the NASDAQ, take a look at the grid there. Matter of fact, before I do that, let's go to the weekly grid and take a look at that. Weekly grid right now is basically looking at R1 40.24, S1 39.24. So that's your min range. I know we have a holiday week, shortened week. So R2 is a little optimistic, I think, 40.79, and S2 38.68 is a little more pessimistic. I think we can get. Look for a really narrow week S1, R1 as far as that goes. Let's go ahead to the NASDAQ now. We'll start with the weekly numbers first here, just since I already have the weekly up. And we're looking at S1, 11,495, R1, 11,920. Probably going, I think it's an R1, S1 week. I don't think we can get these next level numbers on the weekly are pretty big. Certainly could happen. You know, we're a week out from the employment numbers and a whole lot of things that are about to come out. So we'll take a look at that. What's interesting here is that the PPMs on a weekly look pretty good. I'll go into the details on the technicals here. Let's go to the daily expectations. Right now, 11,595. That's just above S2. R1, 11,770. We've been 11,756. So we're trading just above. We traded just above R2 and S1. And I'll update these numbers when I do the August, because I'll be able to give you more of a bias. I looked at them briefly, but I'll do those live with you here just shortly after the open. We've got about 2.5 minutes to go. Let's go to the RTY. RTY setup. Here's daily. We're looking at 41.57, 1841.57 high. So far, S1 is 43, so we printed S1, R1 63, so just short of 63. So a much tighter range here on the RTY. Let's go over to the weekly real quick here. Weekly S1 1825, R1 1880. Like I said, I think we have a pretty narrow week. Maybe there's something that will stimulate some activity. We will have market on Friday. I'll try to update this the best I can on Wednesday for Friday's expectation. So it'll be a little bit of a challenge, but it shouldn't be too terrible to use the weekly numbers at least to see how we traded up to that point. So we're here about a little bit over 2 minutes to the open right now. And let's go back to our primary page here. And what we'll look at here as far as expectations for the week, like I said, I think they're going to be muted. If you care, I think the seasonal say that Thanksgiving week is slanted toward a positive. I don't think this stuff matters. I think it's just stuff for people to look at stats and look back and try to put in some kind of expectation, and somehow, because it happened, I guess I'll give you September. September was a weak month, and it has been since for the last 20 years. So that played out pretty good this year. But a lot of these seasonals, you don't want to trade off of that stuff. I don't even really pay much attention to it. Let's see where we are here. About 28. I'm anxious to go through the database with you here shortly as well, because I think there's a lot of things that are becoming more, I guess, evident through the database. So I'll talk about that here just shortly. So let's get set up for the opening. Let's get on to the level 2 here, just so we can see what's going on. We were getting a bit of a bid, so last few minutes they've sold them back off. We're back down 14, so we pulled back. So we'll see what kind of range. We're starting to see volume relative volume start to spike up here just a little bit. We're just a few seconds away from the open, so let's go ahead and wait for the bell. There we go. All right. Yes, it is a leather vest I have on. It's cold here this morning, in the 20s in Arizona, if you can believe that. Okay, here we go. We're seeing a little bit of a bid come in off the open. As always, the order book gets blown up when everybody comes in. It takes good 10 to 15 minutes, sometimes as much as an hour to get some stability back in the order book. You'll see that it's bouncing around, the level 2 is bouncing around a little bit. We're seeing the volume start to pick up and get a reasonable bid. Back only down 10 again. Looking at a pretty decent bid coming in here. We're trading above on the 5-minute. We're trading above the RTX level. Still getting a bid here. Look at this, only down 8. So they're still trying to come in here. Volume starting to spike as usual. And order book is just very erratic and very illiquid at the moment. So this market will settle in. And I can tell you back in the old floor days, it was like that too. The first initial, everybody's trying to figure out what they're doing. Order flow coming in takes a while to stabilize. Everybody sees the first prices. And that first 15 minutes to a half hour is usually pretty significant in stabilization here. So here we are only down 5, down in a 4 handle now on a negative. So we're looking up at 68. What's nice about the market grid, for those of you that have that on TradingView, it does adjust very quickly. And once this starts to stabilize, you can see the volatility is starting to expand out over in the far right here. That's what's going on there. So let's spend about another next minute or so here just to see if this starts to stabilize here. Still very thin markets on the patterns here. Yeah, just watching this. We're back at 67. So we printed up to 69, back at 67. Looks like we'll probably come into on the webs over here to around maybe 65, 64 handle. We should come back in. We're coming back into the range on the 5-minute. So we're starting to get some stability. Let's go ahead and let's go over to the algos and take a look at how they're set up here. And I'll just start off just briefly here. And I'm going to go through a segment here on the S&P. This is actually a 1-minute chart here. Looking at what the algos are just projecting really just a sideways range, fairly erratic, and ultimately in the next 4 or 5 minutes, potentially turning back negative here, probably retesting back into some of these moving average values down here in the 61 handle, something of that sort. Let's go to the 5-minute, and then we'll get into the hourly. 5-minute is interesting. We've got some upward projections that came out just in this last bar, and we have the algos, the Wavetech fib targets 68, 72, and 75. So we printed 69.50. So but if you look at what the algos are predicting, and this is just on a 5-minute basis, they're predicting really a sideways stability and across the board. So what that means is the moving average values in here are going to be support values. So if you're starting to pull back in here, we're at 63 handle right now. I think, like I said, we'll get into potentially around 61 or so. It's already at 61, just saying it. So what the algos are suggesting is that we're going to be sideways, and then there's going to be a slight negative move maybe in the next 15, 20 minutes. Here's the ones we really want to pay attention to, and I think this is somewhat interesting. When I was looking at these earlier, this is the hourly, and we'll go through the S&P, NASDAQ, and we'll go to the RTY as well. But the hourly is suggesting that we're going to stay above the 10-period moving average right now, that's 39.56 is going to be your mark on an hourly basis. We stay above that, we should see the algos are suggesting we're going to see some stability here. We should just start to rise up probably toward the upper end of the market grid on the hourly, which would suggest a move up to possibly around 70 and into those ranges that we were looking at on the market grid on the daily just a few minutes ago. So let's go over to the NASDAQ and take a look there. And I think what we're seeing similar patterns. NASDAQ's also suggesting this. We've got a downtick bar right now on the hourly, but we should hold this level 11,643. So simple moving average, 10-period moving average. As long as we stay above that on a closing basis for the next 2 hours, we should see some moderate improvement and the markets be stable. And like I said, there's not a lot coming out today. We'll go through, once we finish this, we'll go through some of the economic expectations and things for the week. But we're really looking at some stability here, and the reality of what we've been doing for multiple days is really just a trading range, and maybe we'll call it just a lower 39 handle and just a touch over the 4,000 level is really what we're looking at. So this isn't a nothing burger market. There's no VIG on the upside or downside. We're in a trading range, and at some stage that and I'll show you when we go through our normal technical analysis, is that what we're really looking at is we're getting closer and closer to this pattern that has been expected to be positive and maybe moving into the 41 handle is actually starting to fade a little bit. So let's go RTY, and then we'll move on to some other information I want to share with you today. So Russell, as it has been leading the way. The Russell there's some fib targets on the downside on the hourly right now. It does suggest that we could trade down to fib target 1, which is 1836 for the last trade, 46. If it does that, then that'll pull, all the indices will have a relative move there, but we should see it hold there as far as that goes. And then it looks like stability as the day goes on. We should see stability to the upside. And those of you in the live trading room will obviously be covering this here at 1 o'clock Eastern time today. So make sure the links are above if you sign up for the indicators. Actually, it goes both ways. If you sign up for the live room, you get the indicators. If you buy the indicators, you get the live room for 30 days. So either way, you can go whatever you want. And I'd love to have you in there. We've got some really amazing people that are hanging out in that room. So please join us. But the bottom line is that we're just seeing really a stable market for the next several hours. And that it looks like how it's going to be, at least for the short term. All right, let me talk to you about a couple of things that I had in notes. I talked a little bit about the Fed and just how they're all having this continuing message that goes on. And really, everybody wants to know what the terminal rate is. Where's the rate that the Fed's going to take the Fed funds? And I've been talking about at least 4 3/4. I think they're going to take it even further than that. And I've mentioned this a couple times in the past, I don't know, maybe last week or two, is that they want to break something. And what they want to break is the labor markets. They want to see unemployment start to go up. I saw for the first time last week, we saw continuing claims come up above comes up just above the 1.5 million level. And I think that's an important place to watch. I think if that continues to deteriorate and continuing claims go up, then that might be the first signs of something that is starting to fade. I don't think we're going to see anything as we come in next week significant in the employment numbers. I don't think we'll see that thing skid back, although that 1.5 number tells me maybe employment doesn't come in as robust as for this month. When we get the numbers next Friday, we'll have to see. But the bottom line is, I think that those numbers are going to be solid. Those are going to be pre-Fed meeting numbers, all of that stuff. So I don't think the Fed's going to bend in any way or form. What I'm looking at here is that the retail sales actually did better. All the metrics, for the most part, continue to come in a bit better. Labor continues to be steady. But meanwhile, the big, I guess, talk on the markets is this inverted yield curve. I went through a lot of my expectations last week on the yield curve, and I do believe it's going to stay inverted, and I think that's part of what they want to see. So far, real estate has led the way down on the from the standpoint of other areas. The tech sector has been hammered, with layoffs, and Amazon laid off 10,000 people, and so there's just right at Christmas time, which is pretty phenomenal if you think about it. But but retail had a mixed bag last week, between Target and Walmart and all these folks. So we're just still seeing different types of configurations from the standpoint of what these companies are doing. So I don't see anything broken yet, and I don't think the Fed's going to stop until they break something. I mentioned all the different presidents of Wallace and Brainerd and all these folks out there talking. They're going to continue to jawbone this market and let everybody know they're not going to back off. It's almost as if now that they've said it, they're going to have to follow through with it. They've had such a credibility problem with the inflation was temporary, then it wasn't, all that. They can't back off now. They're just going to keep going. And so I don't know at the moment how much that's going to affect market sentiment, but it looks like it's starting to take hold. But a lot of this stuff, this is a crazy time of the year, folks. Just you get all kinds of cross currents with people trying to square books up and everything like that. And then you throw in this FTX thing and lots of capital being dissipated, billions of dollars being lost by a lot of people, and fraudulent environment that this FTX deal was. It's just kind of crazy. So we're just looking at everything. So let's go ahead. Let's look at, there's still a bunch of earnings coming out this week. Today, I think it's after the close, we got Dell and Zoom, but there's 533 reports coming out this week yet. And there's even 79 on Thursday on the holiday coming out, which is interesting. But there's 533 earnings reports coming out. Nothing really significant that I could see. I just kind of really skimmed them really quick, just looking for the top cap stocks out there. There's a fair amount of retail stuff coming in again this week, but really there's nothing real significant. Like I said, everything's basically is set up to have some sort of very narrow, choppy range that is happening throughout this week, and I don't see it getting too far up or down from the standpoint of what's going on. So let's go ahead and let's get into the database, talk a little bit about what's going on there. So I've got the daily database up here, and not a fair amount actually continues to go on in the daily database. I'll back up and we'll do the intermediate here, which ran on Friday. 604 buys, 173 sells. We're now up at 82.25% bullish. So in spite of these choppy markets, we continue to get traction here. And there hasn't been any backing off. I do expect, I showed you that video on Friday, so hopefully you saw that and how the forward-looking part of this database goes. So we're at 82%. That means that there's a lot of symbols right now that are still in a just coming into a very bullish mode, and there's a rotation that will start. So when we start to see this number drop down, maybe back into 60% or 58%, what will be happening, those will be exits of the trades that came in multiple weeks ago, because they're typically about a 30-day hold. And when I say days, I mean market days or trading days, not calendar days. So whenever I mention anything about the holding period, like 200 days on the weekly is the average, 200 to 220, that really means 220 market days, which is there's about 220 plus, 230 plus days on a year in trading. So let's go ahead just real quick here and let's take a look at a little broader scheme. Let's go back and take a look at the weekly, and I can discuss what went on there. I had expectations because of the high level of percent bullish. I just talked about 82% on the daily, that we'd get some traction on a weekly. It was very disappointing on a weekly basis. We're only at 32.42. And in fact, when I bring up the stats here, you'll see that there were only 249 buys and 139 sells. I thought we'd get a lot more traction. Maybe it comes into the 1st of December. Maybe that's where we get the traction. Usually, and I would say typically, what we're getting here is the potential for with this 82, it carries over into the intermediate database. Means things are elevated. There's so many stocks in our database that are in trend mode. As they go through the trend, they tend to trigger the next level, which would be the weekly or the intermediate. And that we haven't seen that yet. We've seen some of it because we were down at the 20 percentile range, so we're at 32, but we're still only 5,100 of the stocks, a third of the database, which is 15,942 is what the total database is right now. So we're just not getting the traction. Maybe this Friday night we'll get that, and we'll see what happens then. But we're just not getting the traction on the intermediate level. And we do have right now, we've got 5 of the 12 sectors are long, and the healthcare services and transportation are the primary. It's interesting that on a weekly basis that energy isn't in there, but on a short-term basis it is. So we're just still seeing this crazy rotation that's happening on the database. All right, let's start off with the S&P. And S&P, this is what I was alluding to in a brief comment, is the S&P, the algos were projecting that we were going to see a reasonably strong market. And what we've had happen is we've just stayed and trading just below the 200-day moving average. And we traded up to it on the 15th. And now we've just been fading. And what you see here from the algos is they are suggesting that we're going to see some potential downside here. And just as of today, we got some new downward Fibonacci targets here. And I've been talking a fairly bullish game here for a while. And as we come into this, but we still have a slight bullish twist to this. But over the next couple of days, that could dissipate substantially. And this downward targets, the min target is 38.27, 37.41, and 36.68. So these are big numbers. And I'm going to draw something in here just to put all this together for us, is that this is potentially what's going on here. Sorry about that. I'm sorry. This thing, I clicked on the wrong button here. There we go. Sorry about that. It wants to upload its new product here. So what we're looking at here, I want to draw in is if we look at all of what's been going on, is this is from an Elliott viewpoint, these are all corrective waves. You've got overlapping waves, meaning that the previous low here is overlapped and they're just overlapping, which is a sideways trading range. Now we're getting these downward targets here. We're seeing the algos all starting to suggest a decline, and meanwhile the 200 is starting to stabilize and maybe turn up. So that's the phase here. What we want to watch down here is when if the 200 starts to get a little bullish, maybe that will suggest we'll get back above these levels. And we're really looking at a pattern that is starting to fail here. And these are what I'm watching really closely, because if we penetrate back under the 21 period moving average right now, 38.79, that's a ways away. I realize that's like just 100 points almost on the downside. But if we get below that, then we're going to see everything roll over. And I don't think it's a big rollover, like a new low type rollover, at least at the moment. My basic concept is that we're going to see more of this sideways range. And right now we still have a long position from 37.71 on the models. It's still hanging in there for the moment, but it's going to get challenged here in the next several days if we don't get some resurgence back to the upside. And the algos are saying that's not what's going to happen. I believe I have a weekly. Yeah, so this is the weekly. So let's go through the weekly patterns. We'll do this on all the indexes, do daily, weekly. So we look at the weekly patterns. Weekly still suggests that we're going to stay reasonably positive. Actually, when you see these indicators, especially those of you that have these, what you want to watch for is that the 10 period moving average, what this is suggesting on the PPM1 is that the 10 period moving average is going to start to advance to the upside. Well, that number is at 37.95, 3,800, we'll call it. So it's just now starting to turn up. So we could trade all the way back in towards some of those numbers I just mentioned on the daily, easily into the 38 handle, mid 38 handle possibility of testing this 10 period moving average. And what this is telling us that we're going to see that moving average turn up. But this is the problem, is that there was some really strong projections when we got this big reversal a couple of weeks ago. Now what we're seeing is that the downside on the 21 period moving average is probably going to be accelerating down. That number right now is 39.25. So the best case, I'm just going to go out here and say the best case is that we stay between the 38 and 39.50, where we're trading right now, down to 38 handles, somewhere in there. We'll look at the day-to-day market grid that comes up. I talked to you about all of the numbers in the market grid on the weekly, just briefly. That could be a range as well, something down at 38 handle. But it does look like at least the averages are going to start turn up. The problem is that we're not getting any type of sign that there's any probabilities that we're going to see the 40 period moving average move up this weekly now. 40 period or the 21, they're going to continue to fade and have a negative connotations in this market, which means at best we're going to see this sideways range hold in, and that's about all you can expect right now. There was a scenario that was building a couple of weeks ago. It looked like maybe we're going to get more strength, and now it's all dissipating. And we've seen the models were on the daily were projecting much stronger prices. We did get stronger prices, but then it faded, and the predictions of what was going to be and the reality were muted by about 40%. So we didn't get as strong as it looked like we were going to get, and it's all about two things. This 40-period moving average here on the weekly, which is at 40.43. So that, if you recall, we traded 40.50 last week, and we just got rejected out of there pretty hard, all the way back into 39, 20s, 30s. Very hard rejection there. So we're just not seeing any follow through. And I think I'm spending a little extra time because this same scenario is going to play out on all of these indexes, on the NASDAQ and all of that. So let's get into the NASDAQ next. Yeah, so the NASDAQ, this is, we'll start with weekly. We'll go same scenario where the 10 period right now is still negative, minus 0.23. And what this tells us is it's going to turn positive, but all it really is telling us is that the 10 period moving average is going to turn up from here. And that's going to be your support. So right now, that supports 11.3. And if we do get this turning up, that's going to help at least supply some support. And like I said, really looking more and more like a really choppy sideways range, no decisions to be made. Maybe this is appropriate, as maybe we're coming up into a point in time where we're just going to have to see, show me the money, a Jerry Maguire moment, or show me the money from the Fed and show me what you're going to do. And so the Fed meeting, we may stay just choppy range through that Fed meeting, and maybe some squaring up of the books in year end. So I don't know, from the configuration we're seeing right now, I don't see anything really that bullish as we're getting nearer to year end. We're about 6 weeks out here. It's just really hard read, but for sure it looks like there's some stability under the markets, but there's no real rally that can happen here as well. I was reasonably optimistic, talking about, I think, maybe going back a couple of weeks ago, the way things are looking, we could easily print up to the 41 handle. There's a lot of resistance around 41 handle on the S&P and on the 12,000 handle here on the NASDAQ. So we're just seeing this stuff continue to build, and we're just not getting any VIG. This is maybe the best time in the world for, index straddles on options, just straddle this market and just take in the premium, just take what the market's going to give you right now. As far as, like I said, there just doesn't appear to be any VIG anywhere in any direction, other than I would say that there's stability or support under the markets that should hold, and there's resistance above the 200-day averages on all of these indicate best, especially S&P, NASDAQ. That's where your resistance is, and your support's at the 10-week moving average, and that's about all. That's about all there is here to really call. There's anything other than that, trying to get super bullish or bearish here would be not wise. I think you trade the trading range. I talked about this the other day, and looking at crude oil is really, when you get these trading ranges, folks, these are gold mines. You just, fade the rallies, sell the rips, and buy the dips, right? That's the way it goes. And you just have to make sure you define those bounds really, really well. And I think with the market grid and things that we're seeing here and these averages, and the algo's telling us that they are going to improve. When what the algo, we're still weekly here on the NASDAQ, the algo is saying in the next couple of weeks we're going to be at a 0.34, which is trend mode up. But really what that's going to do is just be a support number. So it's going to be multiple weeks before we get into anything really bullish. You look at the algos on where my cursor is here on PPM2, it's suggesting that we're going to have more negative rollover here. So the the 21 is going to end up to be the cap. Guess where it is? 12,012. So just expect to see us locked in these really tight ranges here for a while yet. Take a look at the weekly Russell, and we're seeing the similar patterns here from this standpoint, and we're just not really getting any type of acceleration or anything here at all. We're really same story on the stability from that standpoint. Just don't see that going on at all. So just to expect to see everything that is going forward here with these indexes is that we're really looking at the stable range, a little bit different configuration on the Russell. The upper bounds are right now closer to, right now 1860 is the top end. We're trading 43. And so the high today is 57 and the low 36. So we're really just, once again, trading in these ranges. This is a weekly chart here. If we go back here and just do the Russell here on the daily, you'll see that algos are also suggesting we're going to see some downside. We could trade as low as the 40 period moving average, put us down at 1777. We have a fib target here at right now at 1795. So I'm going to call 1795 to 77 is probably going to be a target range on the downside. It looks like all the algos, just like on the other indices, are looking much weaker here. All right, let's take a look at the treasuries. We got into that extreme sell-off the other day, or rise down to 68, and we're seeing a rise start up again. Looks like stability, and that yields should come back in. I talked a fair amount about this on Friday, is that what I'm expecting is for us to get back to around the 390 range. 388, 390 on the upside. I don't see it really coming in a whole lot. I'm going to go over to, let's go over to Trade Station here and take a look here on this. There's a couple of things I want to show you over here. Is the, right here is the weekly 10-year. And we have this rising 10 that was in there. Originally, I thought that was going to be a bullish situation. But then all of a sudden we got a rollover. We still have a positive PPM at 0.88, 1.26 on PPM2. So there's still a lot of support. But the issue is that the PPM2 is representative of the 21 period moving average. That right now is at the 344 level. And that could be a print toward the downside. If we just look at the market grid this week, S1 375, we basically already printed S1, R1 389. So we haven't been there yet, but we'll probably see somewhere 389, 392 on the upside for this week. And I don't see us, 366 is S2 on a weekly. I don't see us getting down to there. One of the things that I mentioned, and let me bring this up. And that is there's some Fibonacci targets on the downside, which are just ridiculous. 3.37, that puts us at that 344 level that I mentioned a few minutes ago. And then we're looking at 3% and 278 is down here, and that puts us down into these averages. The good news is that the angle of attack on these, on the 21 and 40, the 21 is pretty substantial at 1.27. So I don't see that being challenged or being taken out. And that's that 344 level I was just mentioning. But just from a pure market grid standpoint, I think this week, like I said, is probably 374, 389, maybe a 392 on the upside. It looks like we want to move this just a bit higher on that level. I'm just going to take us over for a second here to the yield curve. And the curve is starting to flatten out just a little bit again. It was steepening, and now we're flattening out just a bit here again, and we're coming back into minus 0.9 on the 530s. So that was way up here at 13 above. So we finally are back inverted here on these, and as well, we're still on the 1030s. We're still in a positive mode, but that spread's not as important as the 530s. And I know that a lot of folks on the retail side and the news media focuses on the 210s. They're really not that as important, other than they're the most inverted, so that's where the story's at. The 530s, as many of you know, I worked with banking institutions for over 12 years and consulting some of their largest trading rooms. And from a yield curve standpoint and curve trading, I did a lot of that back in the late 90s. And the banking system hasn't changed in its configuration. That is the biggest, that represents more of the activity of the banks. And what the banks look at is really duration of their holdings. And for a bank to get over longer than like a 7-year duration on their overall book is like screaming bullish. They just don't do it. They hang around 3 to 5 year duration is pretty typical, and everything's hedged. Banks don't take risk. That's not what they do. They manage their money from the standpoint from a much different viewpoint. They're not risk takers. They take fees. They basically suck off the teat, and that's how they make their living. But they're not going to get too bullish or too bearish. They're going to stay in that middle range. So that's why that 5-10 spread is so important to me. It tells me a little bit more about how, if you are a bank, how you want to lean your spreads, and that's really what it's about from that standpoint. All right, next we'll cover crude oil. Crude is getting pressed pretty good. I mentioned this is the daily chart. A few days ago, I mentioned we had these Fibonacci targets on the downside. They were first projected on the 11th, and so now Fib target 2 is 76.69. We've had a low of 75.71, so we printed below that. The extreme is 73.77 is Fib target 3. And here's interesting is that the algos are suggesting there's a good chance that, at least on a short-term basis, today will be the low, and we'll probably close higher tomorrow, and we should start to see some stability as we go through the rest of the week. However, just looking at ppm 2 and 3, what's happening here, and I'm going to see if I can expand this so you can see this just a little bit. I'm going to get rid of some of the noise on this chart here, and I just want to clean this up real quick. Just to get a nice clean chart, you can see these moving averages better now, and you can see the this is where the algos were coming in. And we've had these type of ranges being printed before out of this pattern that's been coming in. So a lot of what I look at is this overall pattern that we're seeing. And just to spend a couple more minutes here on the crude oil, because I think it's important, is what we're really seeing here is that once again, these markets, and I've been talking about 82, 92 forever, that's, we're now printing down below the 80 handle, and these targets over here are going to be key. So we're looking at, 73, maybe down into a 70 handle. I don't think we get into a 60 handle, but this is likely based on these algos starting to stabilize just short term, is likely to set up at least a move here. And from the standpoint of what these moving averages are going to do, let me draw in what these expectations. Here's your 10-period moving average is going to come in here. The 20, this is the 40. It's going to have a little softer draw. And then ultimately, you should rebound into these averages where I'm showing you right here, right now, is where we should go to. The algos down here are suggesting a general improvement coming up to test these averages, not to get through them. And so if I clean all this out, really what you're looking at here going forward is maybe some kind of pattern like this, where we're coming into the moving averages coming in, and we get some stability somewhere around this level we're at now, 77, maybe 73 on an extreme. There could still be follow through this. But the algos are suggesting that we're coming into that end right now. And I think that's one of the key levels to watch, is kind of keeping this chart clean here, so you can see all the numbers with all the noise in the other indicators that I have up there a lot of times. So you can see a nice clean view of what's happening here. And then what's on this page is right now is 10, 21, 40 simple, and 200 period up at the top here. You're seeing even the 200 starting to roll down, and that's significant in itself. Let me just bring this up so you can see this whole scale while we just take a look here. And when I tell you this is the Wavetech Fibonacci projection tool, you can see we had projections over here for the market to come down. That Fib projection was 79, we got to 81, but this is a similar type ranges that we've seen before coming out of all these patterns. So there's some commonality in a lot of these downside patterns here. Here's another projection, 74. This 74 projection has been around. 77, 74 has been multiple patterns going way back, into earlier this year. This is a daily chart. So everything is clustering down in this level. And when I see those type of clusters, what they typically tell you is that there's some substantial value there that you need to pay attention to. And especially with the algos setting up, at least telling us that we should see some stability here somewhere. Like I said, this could be at 77 level, it could print down as low as 73. I don't see the market getting through that 60 handle. Anything's possible, but I think this week we'll see things happen. I think the OPEC folks are getting a little nervous here. It's 79 on US WTI. I think that's becoming an issue, and I'm sure they're probably going to try to cut back at least some production or something that will help to affect the sentiment. And in the end, what it gets us is really something more significant. I'm going to go to the weekly chart here just to show you the extremes. Right now, the fib target 71.76 is fib target 2 even on a weekly, and that was projected way back in July. That's where these projections, and the extreme is coming in here at 62 handle, but we also have the 200 week moving average on the crude oil at 65.44. So it's quite a bit, substantial amount of support coming into these markets. And who knows, maybe they want to start filling up the SPR. Maybe there's a bid coming from our own, from within, we'll say, which is really ridiculous. And I know I've seen calls by Biden administration to increase production, and they're going, wait a minute, these companies, they listed a list of these major companies made $30 billion in X amount. Meanwhile, they don't talk about, what Apple's got $150 billion of cash on the books. No one talks about that. That's okay, but it's not okay for people to make money on fossil fuels. So it's we see this all the time. But regardless of all this, these levels, I think, will start to come into play, and these are more than likely extreme levels that go on, and we'll just have to see when we go through everything. I remember the amazing opportunities that came out of the 2020 situation. It's on the screen here. This is the 2020 lows here. But what we've been in ever since then, if you folks have not seen this, I'm going to draw in one more thing here just for perspective here. I know I'm getting quite long in the tooth here on crude oil, but I think it's important to understand is really this is something I talk about a lot. This is what I call when these weekly trends get into this. This is where we get into this little flat where these indicators go up and then they go flat. And this is trend maintenance mode. What we've seen recently, though, is some breakdown in some of these. And this is potential for us to go into a very broad trading range. And I'm going to call it like 70, 90 that we could end up in. Just a really erratic range from here. Okay, next we'll take a look at gold. And gold is continuing. This is the weekly is continue. I'll keep this nice clean look on here without all the clutter, without even I'll put the market grid back up here in just a second. But we're continuing to see for the next several weeks that gold should support. Basically, the algos are suggesting that we're going to stay above the 10 and 21 period moving averages. This is weekly. Those numbers are 1720 and 1692. Those are your major support levels. The algos are suggesting that we stay above that. Ultimately, maybe 4 to 6 weeks out, we finally get to a point where the 40 period moving average on a weekly is going to be challenged. And that will be probably look more like this. That's the 200-day moving average at 1796. It's around 1804 to 1796 is the breakout. And the short-term algos are suggesting we still have some consolidation to do right in this range here, with the 40 probably being some support here, which is at the 1690 level is going to be the extreme. We're trading 1736 right now. That's your extreme levels on a short-term basis, probably more like 1710 to the we'll call it 1702 down to potential for 1690. But that looks like that's where the range is there. All right, next is Bitcoin. What a crazy world crypto is living in. What's interesting is the stability that we've seen in the market looks like it's going to continue. We're at 16,130 last trade right now. Let me let's just take a look at what's going on here. And it suggests that we're going to rally back toward the 21, which is 18 handle, but that's going to be probably the cap. But ultimately, it looks like, this sounds crazy. On a daily basis, it looks like we have some stability, at least getting back towards between 17.5 and 1800. When we go over to the weekly, this is where the ugliness really shows up, because these short-term trends can be slightly deceiving, and the patterns that we're seeing here on the weekly is, I've been talking about this for multiple weeks, and it was being projected back around the end of the month, beginning of November, where I was talking about, it looks like there's a complete collapse coming in Bitcoin, and that's still the case on an intermediate basis. So on an intermediate basis, that doesn't mean we can't rally $1,000 or something. It's certainly going to be a lot of volatility. There's a lot of news still coming out of the SBF situation and everything that's going on around crypto. And, I think I was on some, what I thought were some pretty amazing Twitter spaces last week. And I guess they thought it was going to be perpetual, because it's kind of running out of steam as far as what to talk about. There's only, especially since nobody really knows all the details of what's going on with FTX. So I think the FTX situation, while substantial, could fade just a little bit here in the next couple of weeks, maybe enough to see a little bit of a bid coming in, but the weekly patterns are still suggesting that we're going to move down. And I've talked about this 13,000, 10,000 range being a target here, but there's just nothing to get excited about in this market whatsoever from that standpoint. So we're just really looking at plenty of downside in this market yet. So went through, I know I got really in depth on crude oil. Sometimes these markets just come up. What I'm going to do, I'm just going to come up on screen, and I haven't covered the Dow for a while. I'm going to go finally at the end here. I'm going to talk about the Dow, and I'll come up and summarize things, and we'll go from there. But I think that the Dow is not going to go back into another bull phase, and I talked about this a couple of weeks ago. So let's go ahead and get into the Dow real quick here. All right, so the Dow continues to come. It came right down to the 21 period moving average. What's interesting here, however, is that this is why I'm telling you, I know some folks are talking about the Dow going back into another bull. It's not going to do that, but what it is going to do is set up a pattern. I'm going to put the market grid back up here just so you can get a view of what that looks like. And so from a weekly market grid standpoint, it looks like the moving average on the 10 is rolling over. We're going to get pretty negative there. So that's going to be your upward bounds, 109, 110 on the upside. Right at the 21 is 109.06. So we're probably going to get sandwiched between the 40, which is 105, and 109. I mentioned this, I believe, last week when I covered the Dow. Algos are suggesting that all of these moving averages are going to roll over, including the 40. So ultimately, the Dow probably does roll over, and the Dow craziness that we've seen is pretty much done. But I think it's going to take longer than folks believe it's going to take I'm just going to go over here to the monthly here, and you can see even the monthly, the algos are starting to look like they're potentially going to fade, but all they're doing is burning off some of the upward momentum. Right now, the 10-month moving average 105, so that's your floor. Right now, it's 1.06 value on PPM1. The probabilities are around 10% trading or closing below that level on a monthly basis. So we've still got a better part of a week to go through to the end of November, if you can believe that, and start December, which is crazy in that thought itself. But the algos all suggest that we're going to stay positive and that 10-period moving average is going to be a really key level to watch. So don't expect the dollar to go up. I think it will rally a little bit here for the next maybe couple weeks or so, but probably the 109, 110 level is the extreme on the upside. 105 is rock solid. So just expect more of a consolidation range, especially as everything, folks, what we're looking at right now is really coming into what I would call the end of the year syndrome. Everybody's, if you look at what's coming out of the markets as far as any of the commentary, no one's talking about December. They're talking about 23 and 24. All the major institutional firms are already putting their book together. You have to understand, I talked to you about this the other day, is every bit of research that goes on out there that is distributed by these firms are marketing material. I've worked at Merrill Lynch research, okay? It's marketing material. It was our way of telling you how we wanted you to think about the markets so we could sell you stuff, okay? That's how it works. That's what Morgan, that's what all the boys do. That's the whole program. Individual investment advisors do the same thing. These guys write books so they can hype their strategy so they can sell, like, oh, we wrote a book on this strategy. Look at this. This is what we want you to do. That is the world we live in. And trying to be objective around all of that junk is really much different. And so, I always tend to look at myself as an insider, maybe a whistleblower, if you will, from the standpoint of the BS that happens out in the world. So when you read these Goldman reports and you see this stuff, know what they're doing. They're really trying to influence your thoughts and how they want you to think about the markets. Listen, folks, you guys know, we're in the world of social media and how we're all hooked up and watch this stuff. Believe it or not, I restrict myself massively to where I go, where I listen, and all this. I saw somebody on Twitter going, I read every investment book I can find. I'm going to tell you right now, do not do that, okay? You will end up with no opinions of your own. Do your own homework, figure this stuff out. I know you folks, a lot of you watch my channel, a lot of you have gotten my indicators, but you can formulate some really good ideas. I mean, we had members of our live room and the community come up with major, I would say, breakthroughs in my work over 40 years that we've come up with. So yeah, there's good ideas, but you have to stay really focused. And I think that most people get too tied up into reading these marketing reports. And God help you if that's you and your investment advisor is sending you this crud. So anyway, folks, I think we're close to the end here. Yeah, we got about a minute and a half to go. Take a look at Vito, just a comment. So you might have to, depending on what you're looking at, you might have to reset. TradingView has a whole lot of quirks in it, and sometimes you have to delete and replace those indicators back on. I've seen that happen as well, where, matter of fact, I brought one up today in the live stream that wasn't calculating the algos. And typically what you have to do is take them off and put them on. And it's kind of clunky and wonky to do that in a live stream. So be aware of that. Yeah, I just see somebody making comment about reading all these books. I mean, what a waste of time. Study the markets. Just really focus on these things. And what I try to do on this channel, and I've always done this with all my customers for years. I've had a YouTube channel for a long time. I used to do a Ustream, which is a completely different platform. We started way back in 2014 is when we started that. But the point is that you need to do your own work. I try to get everybody set up, and that's what we do in the live room, trying to get everybody so you can take these concepts and use them and learn from them and apply them to your life. Our Wavetech software is actually already doing a lot of work for you. And what we do there is use that technology, but use the time that you want to do is the selection of stocks and the research of what to put in your portfolios. That's what every money manager does. That's why we do this, what we call ETF hacking. We let all the big institutions do the hard, heavy lifting and spend millions of dollars on research. And then we go in there and grab the constituents, take it into our platform, look at what the quant stuff looks like, how well it tests, how well it works, and build portfolios out of that. We have tremendous success doing that. So, you just really have to figure out where your niche is and stay in that pattern. So running a little bit over this morning, but thank you so much for being part of the channel. Just remember, Tuesday, Wednesday, that's it this week. And then I'll see you next Monday morning, and we'll be back on the same schedule. So really appreciate everybody. Make sure you hit the like button. Want to get the views. I know I had a lot of folks in Europe that have been that used to watch at night, and they don't have that benefit anymore. So just tell your friends, hit the like button, hit the subscribe, so YouTube knows that you like what I'm doing here. Thanks again. I'll talk to you tomorrow at the same time. See everybody else in the live room in a couple hours. Hey, Craig, thanks for that shout out. Yeah, I guess TradingView's got a forever pricing. I'm going to check that out as well.